Treasury bills markets traded on a relatively quiet note as investors await the outcome of today's primary market auction, where over 264 billion naira is on offer. And I have Chuka Nwachukwu, the head of fixed income trading at UBA, to discuss the midweek activities in the fixed income space here in Nigeria. Thank you so much for your time today, Chuka. And let's first get on straight to what we're seeing play out in the Treasury bills market, the primary market auction. And in terms of expectations, how do sentiments compare with the previous auction?
Okay, thank you, Ken. The primary, secondary market has been relatively quiet, especially today because of the NTB auction. We've seen, although we've seen some bearish sentiment, especially on the shorter end of the curve, people trying to sell down their position in order to create liquidity. Like you said, the NTB auction is today. The last time the auction result came out at 7% from about 6.9 level. That's about 23 basis points. 93 basis point movement in yield. So we've seen also yield hover around rate hover around between 9% and 11.5%, especially on the special bill side of the market.
So I'm curious to know how you've seen the performance of the market since the last MPC decision, because I understand we're seeing that flight to safety. Investors are leaving the trickier assets, the equities, and are coming more to the safe haven, which is fixed income.
Yeah, the reason why we've seen a flight from the other market, the equity market, is because of the low yield, on the fixed income market. Now, rates were moved. MPR rate was moved from 13% to 14%, and that has also attracted other investors from, especially from the equity market, into the bond space. Really, everyone wants to go to the safe side in terms of investment. And so if the yield, especially on the fixed income market, has also moved up slightly, is looking more attractive, and that obviously will attract a lot of investors on the equity side. And so the reason why people are moving into the fixed income space is to get a better yield and a better rate.
And but looking at the yield curve, and I'm trying to look at what the activity is saying, especially for bonds, where we see more interest play out.
Yes, we've seen yield move, from within 5 months from 6% to about 13.5, slightly touch about 14.05 on the longer end of the curve. And so this has actually attracted investors into the bond space. Now, last week we had a bond auction where we saw a significant movement in yield, from 10% levels to about 13.75 on the longer end. And so this has actually attracted more investors. And of course, look at the inflation figure that came out. Inflation came out at 18.6%. And obviously, all these are a pointer that yield will continue to go up, and that's what we are seeing.
Yeah, but Chuka, now I'm curious to know what your outlook for the currency is, especially what we're seeing play out in the I&E window, and also the demand pressures we're seeing in the parallel market.
Okay, the I&E is presently trading at 427 levels. The demand is quite heavy on that end of the market, which is the FX end of the market. The parallel market, obviously is not regulated, so we see all sorts of crazy rates there. And obviously, my concern is on the I&E, which is more structured and more regulated. And so the rate has continued to go up. Within 2 weeks, we've seen rate move from 420, 425 to currently trading at 427 presently. And if it continues this way, we'll probably see around 430, 435 in the nearest future.
All right. In one word, what are you expecting from the U.S. Fed decision?
I just feel that they will hike rates. They've given further guidance; they will do that, and then this will also attract capital flight, especially from the third world economies like Nigeria and then the rest of Africa.